Hello guys, welcome back to this YouTube channel. So today I'll be doing a quick review on last week's price action, and then we'll be looking into doing another outlook for next week. That's tomorrow. That's from tomorrow till Friday. So here on Eurusd for our charts. So last week, I think we had price was somewhere here last week. Maybe somewhere within this high and this low, trading within this high. We're trading within this high and this low last week, and I said that since price was already in a push phase, that's after we had this daily break of structure down here. I had this daily break of structure down here, and I was considering this as a single push. So since we've already broken this low here and we are way down here, I said I wouldn't be favoring shorts, and I also say that if I get some kind of reaction from maybe within this extreme mix, I could have taken a sell from here to maybe take out this low, since price might still be respecting the 4-hour order flow and structure, but that did not happen, and we had a break above this, which is something I really wanted to see. Like some kind of break above this high. So, and I see when we have some kind of break in market structure like this, see we are pushing down bearishly, and then let me say this the 4-hour, and then on the daily we have like some kind of this like a single push on the daily, but on the 4-hour we have this lower lows and lower highs. So if the daily is going to pull back, the 4-hour structure will mostly change from being bearish to being bullish. So, and that will be price breaking above this high. And then when we have a break above this high, this is clearly a break construction. But sometimes we get a break above the high, and then price will continue going down. So I normally would want to see some kind of confirmation, that's price pulling back within this new range, respecting it, and then making a new higher high by breaking this previous high, which would then confirm to me that this low now is my confirmed higher low, and then this high here is my new higher high, and so I can confidently take a buy whenever price comes back down here, because I'll be like very confident that the pullback has now begun, since we have a confirmed bullish market structure. So I could take longs from maybe demand zones within here to take out this high, and maybe mitigate a daily supply zone should be somewhere above here. So that was the whole idea behind the reason why I wanted to see some kind of pullback on the Euro-USD, because since we have this single daily push down, and then the 4-hour clearly was making lower lows and lower highs, for that pullback to commence, for the daily time frame to pull back, the 4-hour will have to change its structure, which will be a break above this high. So when we have a break or structure like this, I normally want to see some kind of pullback into the zone, maybe into this demand zone, which price didn't really get to this extreme. It's not really an extreme one, but it's a demand zone. Price didn't really get to the demand zone, and then we also have this demand zone, which price didn't really get. Price taps like the top of the range, and then continued up. So, and this would have been like the kind of, let's say, aggressive entry or some kind of I don't really know what to call it, but it's not really confirmed yet that price might want to pull back higher. That's the moment you got this break and pull back here. So what I normally wait for is for price to pull back, break again, making this my confirmed higher low, and then this to be my new higher high. So if price pulls back into maybe a demand zone here, or maybe the whole range, I can confidently take a buy to maybe take out this high. So that was the whole idea. I think that is what happened last week, and that is exactly how I wanted it to play out. But I didn't really take any trade last week because I was busy with some other things. So I'll just quickly recap what happened here. I think on the 15 minutes. I already did the recap with someone, so I don't really like go into more details doing it. So this was the 4-hour high here. So the 4-hour high here, and we had our low. So the moment you got the break above this, you could have looked for maybe some kind of aggressive trades. I think that would be, yeah, that's on Monday. And then we have some kind of 15-minute bullish structure where it's making higher highs and higher lows. So you could have still just followed the 15-minute structure and maybe take some kind of buys down here, which was what we did on the review I did with someone. That's just what we did. That's mostly what we did. Like taking loans from here. So let me just explain the thing around 2 to 3 trades. So it's clearly some kind of inside study, but to get the idea. So yeah, so the reason for this sell here, like, it wasn't really a very clear one, but was because we had this to be our 15 minutes pullback, and then these are 15 minutes push. So we know that after a break construction, which was saying we'll get a pullback to mitigate maybe a demand zone before price continues on to make a new higher high. So that's exactly what we're looking at. So here, after we got the break construction, this is like a single 15-minute push. This is our break construction. After we got the break construction, we are looking at this as our last demand range on the 1 minute. So as you can see, price pushed down and broke the demand range here. So this is where we got our break construction on the 1 minute. So now this could be signifying to us that the 1 minute, that based on the 15-minute structure and based on where price is on the 15-minute, 1 minute could be pulling back before continuing that whole 15-minute structure. But just having this break alone is not really, but I say I won't really feel very confident taking sales from maybe here by just having this break alone. Maybe sometimes I do take trades like that, but it's not really like it's something I normally want to see that confirmation before taking the trade. So here, we have we have some kind of reaction to this, the last area of demand before the break construction, as I normally say, our last area of supply or demand before a break of structure, they are always important. So we have like this reaction to it and then the break. So within here we have our engulfed candle and price came back. Initially we had some kind of this, we had something like this on this zone. This was like our initial entry, something like this. But price really push back into the zone on the first pullback. So we wanted to, so when we had this break here, we were thinking, okay, we might be taking the trades from here, but the high where we wanted to take the first trade was clearly used as some kind of liquidity for this particular supply zone. So it is clearly just flowing order flow and structure. So to me, since we already know, okay, we have a break of structure here, price pulls back, doesn't close above here, respects this supply zone, and then breaks another structure again. So if price should pull back, it should be to either this whole range here or maybe this S is some kind of refined zone. Before that's if price should respect this entire range, that's should just pull back to something within here and then continue lower. So here so I was talking about taking trades from here, but there are huge possibilities that price won't come back to this. Price might just tap the bottom of this whole range because it's like the whole supply range. This could be some kind of 3 minutes engulfed candle or maybe a 2 minutes. Let me check 3 minutes. Yeah, it's clearly a 3 minutes engulfed candle. Yeah, this is the 3 minutes engulfed candle. So price might just tap the bottom of the range and maybe not get to that 1 minute engulfed candle which was up here. So that was the reason why the entry was set to this low here. And then the SL was just above the 1 minute zone, or you can still put your SL above the 3 minute zone. Take profit was basically set at the 15 minutes demand zone. It's more than that. So that was around 186. So back on the 1 minute. So that was the first trade. I didn't really take the trade, it was some kind of space I did with someone, and that was like just reviewing the previous week. And then we had some kind of missed entry here. Get tagged in your side points, and then after we had this pullback here, we had the pullback. We now had another break construction, so which now made this zone our new demand zone. So if we are to take a trade from this demand zone, we know that if price is to pull back, if price, because we normally use the 1 minute for our entry, so if price is to pull back on the 1 minute, the whole, maybe this could be a single push on the 15 minutes, the pullback could turn to some kind of bearish structure on the 1 minute. So before we take the buy from this supply zone, we need to see that 1 minute bearish structure, see that whole lower lows and lower. We need to see that break of the bearish structure. Maybe you can take the trade on the first pullback into the zone, or you wait for the confirmation and then take the trade to target this high. So that's what we were looking at on, I think this Tuesday. Yeah, this Tuesday just before London session. So we had that whole bearish market structure pulling back on the 1 minute, and then this was like our last range. So we had to break here. So price pulled back. So you could have taken the trade. Maybe you took the trade here and you took a loss. But you should remember you're working within this whole range, this low and this high is like your range. So you can decide to take loans from anywhere within this range. You can decide to take a buy from anywhere within this range. So let's say you waited for the confirmation just as I would normally do. You could have taken the trade that after you got the pullback, you got another break, confirming this to be a higher low and this new one to be a higher. So you could have just taken the trade from this whole zone. The zone was actually very large. So we kind of just used the equilibrium of the zone to take the trade. So we just used the equilibrium of this demand zone. Use the equilibrium of this demand zone to take the trade. So that was basically it for Monday and Tuesday. I didn't really study Wednesday, Thursday, and Friday, but they are basically they're just the same thing. Like you just repeat what you did on Monday, Tuesday, you just repeating what normally do. That's how we trade here. So going back to the 4-hour. So here on the 4-hour, we know that this range here, this range below this low here, and this high is our our whole supply range. So what we want to see is for price to pull back into this range, like into this whole range. That's something we want to see. And until price pulls back, price will just pull back and then tap the bottom of the range and continue lower. Like there's a possibility that price will do that. And at the same time, when we have like this range is really huge, like it's very huge. You can't just set limits here and then set a SL here, like it doesn't make sense to do stuff like that. So I had this whole range marked up last week, and within this range, this is like my refined zone. There's a possibility that price might want to come back into this zone, and sometimes price won't really come back to it. But I was looking at this zone as some kind of a supply zone, because we had a reaction to this extreme week here. So So we had a reaction to this extreme demand here, and price pulled back, and then we got the break. So there's a possibility that price might just pull back into this, like the orange, into this. The price already pulled back into it, but price might still pull back into the reference zone, or we have another inverse candle here. That's after we have this sweep of liquidity over here. That's some kind of long buy side liquidity here, and their price could still go back to this one. And then we have another zone here, this hold down candle here. So I'm looking at this price as some kind of buy side liquidity for price to maybe sweep the liquidity and then pull back into this POI before continuing the line. It's possible that price will do something like that, but we just have to be very flexible when we have multiple zones like this. So we just like watch the reactions in those zones, maybe using the lower time frame, something like maybe 15 minutes, 5 minutes, like any time frame you feel comfortable. Just watch the reactions within this full zone, and price could still also just disregard this zone and then pull back higher into this particular one here before continuing that. So for the meantime, we'll be working with the structure we have here. We'll be working with price respecting this low and then continue to break above this high, maybe just continue the bullish 4-hour structure, which is here, and then maybe react to this whole daily supply range before continuing down. So that's something we want to look out for on USD. So going over to pound USD. So here on pound USD, we had the same thing as it's actually very close. It's not exactly the same, but it was actually very close because we had the break above here. So we wanted to see that pullback. Let me see that pullback, but I think we are kind of stuck in a range on the pound USD 4-hour chart because we have some kind of sweep above this high. Price doesn't really break it and then sweep the low again. Not really breaking the low, so we are just kind of stuck within this high and this low, price just within the high. So just taking some kind of buy side liquidity, then maybe come down, take sell side, like it's not really defined yet. So we just wait for more development on pound USD. So maybe Tuesday, Wednesday, we'll see. Because we will have later on pound USD. So gold. So here on gold, the destruction on gold is the same thing. Not exactly the same thing, but it's actually very close to that of the Euro USD. I think last week we were somewhere here. I didn't really expect it. Last week we were somewhere here, and I think I said something about price as if you get some kind of reaction within this high. I can't even remember what I said on gold last week. But if you got some kind of reaction within this high, you could just take sales from anything within this range, and then we had another break of structure, and then this now is a break construction. Maybe this break construction now could be leading us into some kind of pullback into maybe this supply zone here, or for price to come back and fill up this imbalance here. So there's a possibility that price might want to go up higher into this whole range before continuing lower. So here sorry, they are good. So we have this break construction. Those are break construction. We have a last area of supply. Sorry, last area of demand before the break construction, which is a very important zone. Then we also have this zone here with like extreme demand, and this again, so it's about 7 weeks. So we have like 1, 2, 3 zones to look at for gold, because here now we just had the reconstruction here. So this, maybe if you get some kind of pullback, taking buys here is like the aggressive entry which you can take. That's if you get the reactions you needed, or maybe when you get the confirmations you need within the zones, you could take the buy from here or here or here, or you could still wait for price to make a new higher. Use like the conservative approach, make these are confirmed higher low, and then now somewhere here, therefore price to pull back into maybe some demand zone here, and then continue that bullish pullback. So it's something I'm looking out for. I don't really have much to say here. So that's it for gold, USD, and pound USD. So I really hope you find this video helpful and useful. So guys, that will be it for today's video. I wish everyone a successful trading week.